Hello, fellow entrepreneurs. I welcome you to Module 1 Financial Management. In the previous topic, we learned about the separation of accounts and its importance. However, today's topic will focus on bookkeeping. The objective of this lesson is to understand why maintaining daily records is vital for the long-term success of your enterprise and to be able to apply simple bookkeeping techniques using accessible tools, such as notebooks, to track business cash flow. Let's begin. Madam Abena, a skilled seamstress. Last month, she had a huge order to sew uniforms for a local school. She received a large payment but was too busy to record her expenses. She kept spending. She bought new threads, zips, fabrics, paid wages, in addition, personal items and paid for transport fees. Abena made a big sale, but because she relies on memory instead of keeping daily records, she can't tell whether the income covered her costs. Now her hard work feels overwhelming. Have you ever been in such a situation before? Many businesses fail not from a lack of sales, but from poor money management. Let's look at the power of daily records. What Madam Abena needed was bookkeeping. Bookkeeping is the process of recording, organizing, and tracking all financial transactions and includes sales, purchases, payments, and receipts in order to keep clear and accurate records. In simple terms, it involves noting all money coming into the business and all money going out. Although there are many books used for this for keeping records in the business, this lesson focuses on the cash book. What is a cash book? The core idea is creating a simple cash book, a method that lists all sales and all costs over time. Note: every single transaction must be recorded daily, both cash out and cash in. All cash in, including sales, savings, or loans, is recorded on the right side of the cash book. While cash out includes every expense related to the business operation, such as rent, suppliers, interest on loans, and salaries. They are recorded on the left side of the cash book. To find out whether you made a profit or a loss for the day, week, or over the month, deduct the total of all cash out from the total of all cash received. Recording transactions instantly minimizes errors and keeps a hard copy of all past transactions carried out. To work out your balance, whether you made a profit or loss for a period, you simply subtract your cash out total from your cash in total. It is a basic tool to track your cash flow as an entrepreneur. Why is bookkeeping important? 1. It allows you to calculate and monitor profit and loss accurately. You gain real-time visibility into your cash inflows and outflows. 2. It helps you manage stock and raw materials effectively. You can track your stock movement and determine which items move slowly or quickly. 3. It attracts funding. Financial institutions need to see clear, accurate financial records to assess your capacity to repay and instill confidence. 4. It enhances management. Knowing your average monthly sales means you can plan for the future. It empowers you with financial data for informed decision making. What happens if ignored? 1. You risk facing financial constraints and difficulty assessing your performance. Let's use Madam Ama, the hairdresser at Bantama. She doesn't record her daily sales or expenses. When her hair dryer breaks down, she realizes she doesn't have enough money to fix it, even though she's been busy all week. The truth is, she spent her profits without noticing. 2. The cost of making wrong decisions is high, often leading to business failure. Do you remember Yao, the carpenter at Tafo? He keeps no record of how much he spends on nails, wood, or paint. When customers complain about high prices, he guesses his cost and reduces his price. Later, he discovers he's been selling below cost, losing money every day. 3. You will be unable to plan for the future or predict cash surplus or cash deficits. You remember the seamstress at Adua. She cannot tell whether December brings more profit than March because she keeps no records. Without data, she cannot plan when to buy fabric in bulk or hire an assistant during busy seasons. 4. Your enterprise will struggle to position itself as a reliable partner to lenders, limiting access to crucial funds for expansion. When Yao, the carpenter, applies for a loan, the microfinance officer asks for his business records. Since he has none, the bank cannot trust his repayment ability. He loses the chance to expand not because his business is bad, but because he can't prove it's good. Bookkeeping isn't a waste of time, but it provides financial clarity, and anyone can record their business transactions with some basic understanding. This lesson ends here, and in the next lesson, we will cover how to use the cash book practically and some recommended digital tools for keeping financial records. Thank you. My name is Madam Grace.